All right. Good morning. Good morning. Good morning. Welcome back to another live stream. It is July 10th, 2023. It is 9:20 a.m. The markets are in for a very, very exciting week. We've got CPI data coming out on Wednesday. We've got the residual impact from an overextended, one would call pretty hot jobs report that came out on Thursday last week. And overall, we've got another month in July, a summer month, where theoretically we should be seeing much more of a sell-off in preparation for a lot of hedge fund managers and private equity folks leaving and going off to the Hamptons in their nice estates. We haven't seen that massive sell-off yet. S&P at 438 in the pre-markets. S&P was at 443 last week, so not too much of a decline. Some stocks are red in the pre-market, some stocks are green, so it's a little bit of a mixed signal. But overall, it's going to be a pretty exciting week. And on top of that, you've got China finally potentially allowing Alibaba and all their other tech companies to have the freedom to be able to do what they need to do. Joe Biden did an interview yesterday with CNN, and let me say in a very unbiased manner, he was the most competent and cohesive I have heard him in the past 2 years in that 20-minute interview. I highly recommend you hear him talk about Ukraine and China. And one of the things he was saying about China is that he told Xi Jinping that their economies are both conjoined together, kind of what Elon Musk said, and that you shouldn't pull any fast ones because the United States will leave as quick as a lot of United States companies left Russia. Now, will that actually happen? I don't know. But I think Biden was actually very competent in that interview, giving a lot of unique thoughts and a lot of things he said on Ukraine that I'm going to get into in the course of this morning live stream. But thank you all for being here. Iceman, JJ, Martin Pilda, Jared, Justin, Captano, Sachin, thank you for being here. Johnny, the world's best moderator or best manager in the chat. Real Baby Pluto, ER was right. Joseph Viego, Seth was Roth, Felicia, Rob Minard, Crypto 411, my guy, Adam. Thank you all for being here. He was finally on his meds. No, honestly, man, I think you guys need to listen to him. For those 20 minutes, he did not stutter. I was like, wow. I was surprised. I was doing work at like 1 a.m. last night, just having it play in the background. I was like, is this the same Biden? Like, this guy's like, he's like actually talking. I was like, this is pretty amazing. But like, that's a Biden I could see winning the presidency again, to be honest, the way he talks like that. I mean, there was zero stutters. So I was very surprised by it. And a lot of stuff he said about Ukraine, we got to talk about because there's some very interesting stuff. Samarth, CJ, Rajan, Theo, what's with the blazer? Well, I kind of just felt like wearing the blazer, to be honest. That's what's with the blazer. All right, let's get into some of these charts. Thank you all for being here. If you guys probably have noticed, have not noticed, I haven't posted a video in 3 days. Wanted to give the channel a little bit of a reset, give it a break for a second. I know, I've been posting 4 or 5 videos a day. I was like, let me take a couple of days off. I also had some cousins that had to go back to India, so I was spending some time with them before they left. But I wanted to give it just a couple of days because I have never taken that long of a break to reset and get the channel ready to go. Look at that. Robinhood's 1090 in the pre-market. Look at that, baby. Robinhood is 1090 in the pre-market. But the point is, videos will start again today. And I hope you guys will enjoy. I got a lot of different Palantir content coming out. And we'll have Palantir Daily at 9 p.m. Eastern. We'll have the live stream ready to go as well. Where did you go in India? So my cousin, when I go to New Delhi. That's where my family's from. So my cousins were here for a month and we had them in our house. And so they went back. The cool thing about one of my cousins, bro, he played chess. And so every night we would play like 7 games of chess. And so we were having the last 3 games, right? Before he had to leave. And so he was like, all right, one last game before I leave. And then I checkmated this motherfucker. And he beat me like 20-5. Like he just beat me every single game. But I would get some games here and there. And so I checkmated him. And he's like, do you want to play one more? And like his mom was packing up the suitcase. And I was like, all right, bro, let's play one more. Because I kind of didn't want him to go back to India. He's like a 15-year-old kid. I didn't want him to leave knowing he got checkmated. So then we played another one. Then he beat me. Then it was tied. And then I almost got him on the last one. I was like, my mom was like making some noise and I was like, couldn't concentrate. But like, I was so close to get, like, he accidentally checkmated. He moved his horse and he was like, oh, that's checkmate. And I was like, motherfucker, my rook was right there. My queen was about to be there. Either way, it was fun to have someone to play chess with. All right. ArcG at 33, Robinhood at 1079. We got 5 minutes till the market opens. Netflix at 437 pre-market. Palantir at 1544. So you see Palantir's green, Netflix is red. This is kind of the dichotomy we got going into the pre-market. SoFi at 811, it is very green. SoFi earnings, July 31st. Oh my goodness, it's going to be a very exciting day. They are 5 cents away from GAAP profitability. I do not think they will be GAAP profitable, but I think they'll get close via 2 cents or maybe 1 cent. And the market's going to really like it. And if the market likes it, it's going to be fun. And again, you got Robinhood at 1090. Now, look, the interesting thing that's going on right now, let's go to Bitcoin, is we have CPI data coming on Wednesday. And this CPI data, I haven't seen the estimates yet from the big banks, but what I think they're estimating for is 3.2, 4 to 3.2. If we go from 4% to 3.2, or even 3.4, it's not bad. Now, if we get to 3.7, 3.6, it's pretty sticky. It's like, all right, this is a little bit of a grind. We're definitely getting another rate hike. If we go to 3.2, I think Jerome thinks before the rate hike. I think we're still getting one rate hike for sure. I think it's definitely happening because the Fed is being ideologically dogmatic about this thing, even though, all estimates say that inflation's almost at 2% or below. But I think we have one more rate hike. The point is for the rest of the year to avoid the second one. If we can avoid the second one and get a pause from August to December, Santa Claus is coming to town a little bit early. But we got to get the pause. And I think to get the pause, we got to get to 3.3, 3.2, even 3.4. And then from 3.4, we work our way down to the 3.1, 2.9, 2.7. I think by the end of the year, you're looking at 2.5, 2.6. And then the Fed can't raise rates like that. That would be ridiculous. And if that happens, Robinhood's going to benefit. Growth stocks are going to benefit. The Nasdaq's obviously going to benefit. Like, it's going to be a great year. The question is just, can we get to that point? What's this dude doing with a suit? I just felt like wearing a suit. Is that big? I gotta get a tie too. I don't know how to tie a tie, so my mom's gotta pre-tie the tie. So I gotta get the tie. Katie Blake, thank you for being here. TJ, the wheel deal. It's now a good time to invest 10,000 in SoFi. Anything sub 8 might be waiting too long. Excited for the earnings. It's a good question, man. It's a very good question. I don't have the best answer. I mean, the obvious answer is yes, because over the long term, I think 10,000 at SoFi, even an investment in SoFi at $8 at 8.11 is going to be totally fine over the long term. Now, granted, as much as I think earnings is going to be great, last earnings they beat on 3 metrics and the stock still cratered. However, I think the sentiment has changed fundamentally since then. I think we've got more clarity in the business. Deposit growth is just absolutely phenomenal. Galileo growth seems to be there. And even if it declines this quarter, if it doesn't decline as badly as last quarter, I think it's going to be fine. And momentum is there. I mean, they're advertising like crazy. Like this is, so, I mean, would I put 10,000 no, I would DCA into it, right? Maybe you get some lower prices here or there, but I do think this is, it's at a $7 billion market cap. I think this is not the worst price to be buying SoFi at all. Now it has run up from 470, right? One could argue that it didn't deserve to be at 470 at all, probably deserved to be at like $6. So the run up is really from 6 to 8, but it has gone down in the algorithms from 470 to 8. So that is something that traders will be looking at and the high frequency algorithms will be looking at. But yeah, I mean, I don't think that this is one of the worst prices to be getting in on SoFi. Again, SoFi is still a speculative play in the context of it's a growth stock, but I think we have all speculated that it has a really good shot to get there. And so if it gets there, then it's going to be really fun. All right, we got a minute till market open. Enovix. Enovix is at $19 pre-market. I don't have a lot of shares of Enovix, just haven't been able to buy them yet, but that one is there. We did a whole deep dive on that a week ago. Amazon, where's Amazon? 129. Where's Google? I have a thread coming out today on Twitter about good old Palantir and Goog. $119. Google is the only big tech stock. It is the big tech stock that is down the least year to date. So Amazon's up 50%, Microsoft's up 40%, Meta's up 132%, Nvidia's up 196%, and Tesla's up 183%. Google is up just 34%. So the market obviously feels a certain way about Alphabet. They don't feel like they feel like the real A to Z is bull cases for Amazon, not Alphabet yet. So we'll see how this one performs as we open up the market. All right, we've got a couple seconds. Here we go. The stock market, ladies and gentlemen, on a beautiful Monday morning is open. Wake your ass up. Here we go. Palantir at $15.34, opening just green. So kind of flat as we open up into the market. SoFi at 809. We had a green opening. Robinhood at 1087, up 0.74%. We've got SoFi at 809, Google at 118, opens up red, Airbnb 130.79, Palo Alto Networks 248.66, Netflix at 438, Meta at 296. Boy, do I have some thoughts on Threads, and we'll talk about that in a little bit. But the TLDR, I don't know if it'll be engaging, but I do think if they can get it to a couple 100 million users, it will print advertising dollars because the newsfeed is the most profitable surface area for Meta. Clean Spark, this is a Bitcoin proxy mining play at $6.599, pound trade at 1542. The Qs are up $366. The Qs are up on today's market. Snowflake at 166. Founder sold 90 million of stock about a week ago. So Snowflake now at 166. It was at 192 last week. So Snowflake has fallen a decent amount since last week. SLG at $30.91. Tesla 276. Tesla's flat in the opening markets. But Tesla 276. Their earnings are July 19th, I think. July 19th. So that'll be fun to see in the world of Tesla. Nvidia 427. S&P 438, again, flat. S&P not falling now. Rivian did some moves last week. I mean, Rivian, if we just go to the 6 month on Rivian, look at that. It was at $11 on April 26th. It's at $25 now. So more than 100% up since April. Not bad for Rivian. Enphase Energy 167. Apple is no longer a $3 trillion company. Apple now at $189. If it goes up another dollar or two, it'll get to $3 trillion. But as of now, it is not there. Nikola is up another 2%. Unity Software at 40, down from 44 at the peak last week. Zoom, I posted something interesting on Twitter this week. Someone said, Kathy says Zoom goes to 1,500. I got a comment on one of the videos saying, actually, Kathy's wrong. Zoom's going to $3,000 a share. And I asked the Twitterverse, I was like, hey guys, are we missing something? Am I missing something? Or like all of us collective, because all of us are trying to help each other, right? We're trying to share due diligence. Like, is anyone seeing something in Zoom that justifies $3,000 a share? Because I thought 1,500 was a little bit of a stretch. Is 3,000, reasonable? And pretty much all the comments I got were like, no, this is fucking Microsoft Teams is fine. And look, Zoom, I love it. I pay for it. It's a great product. But the growth, I don't see what Kathy is saying there. Roku at 63, Open Door 378. It's down from 420 last week. Amazon at 128. And Square, this is at 67. It's been holding up pretty well at 40 billion ever since Hindenburg tries to short them. I wonder how their short is doing, because if they had a massive short, I don't know if they pulled out of it or not, but it was such a horrible short. I mean, I don't know if they really capitalized on that one, because it just didn't get there. Robinhood at 1085 as we see, and we got, where's Palantir now? Palantir at 1534. All right. Not bad of an open. What if Zoom partners with Apple Vision down the road? I mean, even if they do, like, first of all, I don't think they need to partner. Zoom will just make an app for the Apple Vision App Store, just like every company will. But like, I mean, even if they do a partnership, bro, 1,500 a share, like, it's just, I don't know. It's hard to see that. Zoom is glorified Skype, yeah, and it's a better Skype, but I don't know if it's that much in terms of its value. Speculative is our middle name. A podcast I did with Sachin will probably be out tomorrow. I'll have a clip of it out later today, but I did a podcast with Sachin. We talked about Palantir, AI, where the market's going. It was fun stuff. So you guys will see that stuff soon. Not financial advice. Yes, none of this is financial advice. All right, let's go to the actual financial advice. Let's go to CNBC. Let's see what the big heads are talking about today. Oh, we got our boy, Tom Lee. Here we go. Let's get some bullishness to wake up this morning, start the new week. I'm still trying to get him on my show, so we'll see if we can get him on my show, but let's see what Tom Lee has to say about the S&P 500.
Here is a new call for a gain of 100 points or more in the S&P in the next week. This all has to do with expectations of a lighter than expected CPI reading. Tom Lee is co-founder of Fundstrat Global Advisors and a CNBC contributor. You started the year more bullish than anyone. I saw the articles last week that I was referencing that you were the one bull.
Real quick, shout out to the super chat. Artist here, my guy, $9.99 reward dressing for success. I appreciate it. That's why I wore it. It feels good. It feels like it's just fun to open up the market like this. Thank you for that.
That was talking about 4,700 on the S&P. So this isn't, you're not late to the party like so many of these people that I love analysts that, they have a Netflix, they have a neutral on Netflix and a price target of 170, and then they raise their price target to 400. And they act like, like no one's going to remember. So you were there early. This is not something you typically do, though. A 1 week call, short term, for a 3%, 2.5%, 3% move in the averages.
That's ballsy. He's saying this week S&P is up 3%. Let's hear why.
Yes, that's right. Markets move a lot around the CPI report, so that's always a big market event. And we thought a tactical sort of opportunity was emerging because last week the market sold off because the jobs reports are strong, yields really popped. So investors are kind of Fed higher for longer, a little bearish into this week. And I think core CPI could come in at 0.2 or better. So it could be a huge downside surprise.
0.2 or lower, you mean? When you say better, you mean it could
Yes, 0.2 or lower than
lower.
0.2.
Yeah.
And
That is way out of where it's been, and people aren't expecting that.
correct. It'd be the lowest since August of 2021. So it's a huge break of pattern, almost a 2-year low. And it would show that the Fed is getting inflation to levels like on a monthly basis that they're trying to target. I mean, a 0.2 is 2.5% annualized, and it might even be repeatable. You might see similar numbers for the next couple of months. And that,
Okay, if he thinks inflation is going from 4 to 2.5 in terms of top line CPI, I don't agree with that. I think that's a little too bullish. But if that happens, yeah, the market's going up 3% in the week. But I don't know if that happens, especially because oil was up last week.
that would, I think, push short-term rates down and trigger a pretty major rally in
And
the equity
you
markets.
also, it has to do with used car prices, which in the last 2 months have been, everybody talked about an outlier, but you also had a statistic about how many of the components are actually in a deflationary trend. And it's like 55% versus historically, that's very rare to have that many of the components in a deflationary.
Correct, yes.
What are those numbers that you?
So yes, on a weighted basis, 42% of the CPI basket is in deflation right now, meaning the price was higher sometime in the past 18 months.
Wow.
And the long-term average is 30%. The 10-year average is 38%. So this is already far higher than what you'd expect. So future inflation should fall, and that's with shelter still rising at 8%. So when shelter starts to flatten out, that's going to take that number to 70% or more.
Hey, Tom, overnight, China had some deflationary numbers for producer prices. Consumer prices were weaker than anticipated. And it had people wondering if there was real concerns about the economy, if there's a downturn there. So how quickly does good news from a weaker CPI become bad news?
It could, based on the market mood. Sometimes the market narrative can flip. But the weak PPI in China, it is kind of adding to a disappointing reopening story for them. But the good news is, China PPI and US PPI are kind of correlated. So I think it does mean it's going to feed over into the US as lower prices, either better profit margins for the S&P or lower CPI.
You also raised your year-end target for the S&P recently, right?
Yes, yeah, we did that a few weeks ago.
48 and
25, yeah.
48, 25. Earnings this season's coming. Everyone's saying that consensus, Wall Street Journal, other places, it's going to be a rude awakening for people when they see earnings. And also the recent backup in yields. Rude. This is a hated market. This is not this. What you're saying flies in the face of consensus again.
That's right. I think there's a lot of entrenched skepticism. I think some of that will get shattered on Wednesday with CPI. But on earnings, the reason earnings aren't doing better is because of energy. Energy is now going from adding to earnings this quarter to actually a 25% drag. Excluding energy, S&P earnings are up year over year. So it's the first positive year over year ex energy since first quarter 2022.
Okay, there you go. So his thoughts are that consensus, which, by the way, 2-year treasury yield is giving you 4.9%. And what was it? 6 months ago? Yeah, look at in May, we were getting like 3.8%. So the 2-year is up. Let me just share my screen real quick. And when the 2-year goes up, obviously money is flowing out of stocks into bonds, into treasuries, because the market is a bit more excited for that. So from around March to May, we were getting some of the lows on the 2-year, and now we're getting back to where we were back in late March or early March, late February. So the market obviously thinks that Q2 earnings are not going to be fun. If we look at some of the earnings that we have this week, earnings don't really start this week. So we got these companies reporting. We get Delta on Thursday, which is the only big name out of these, and Citibank and BlackRock on Friday. Oh, we get JP Morgan on Friday. And you get United Health on Friday. You get Pepsi on Thursday as well. So interesting companies, not the most sexiest companies in the world, right? But some important companies. Delta's going to let us know if people are still flying, which I would imagine they are. Also, we can actually look at the NSA, how many NSA flight traffic. We can actually see how many people come in per day. That website, I found it before. And then the banks, will see how deposits are doing with Citi, Progressive, and some of the others on Friday. But the stronger earnings, the big tech earnings, all that stuff, I believe that's starting next week after this week. And that's what we're going to see a little bit more to see what happens from there. Amit become my morning ritual. That's the plan. Thank you for being here. It means a lot to me that you guys are here. It's the coolest thing to open up the morning like this and start the day like this. So thank you all for being here. So, Tom Lee, he believes that the market is getting Q2 earnings wrong. And this is where I'm a little bit in agreement. I'm a little bit in disagreement because I think for some companies, like, I don't know if earnings are going to be great. Robinhood now down 1%. Like, for example, Open Door. I'm not an expert on this company, but this stock is up about 200% for the year. Do we think that they're going to have earnings that's going to justify continuing the momentum and continuing the rally? I don't know, right? It's hard for me to. Oh wow, look at this, not bad. So I just took a look at some of these different prices on these options. They're up. It's going to be hard to justify that Open Door is going to be fine, right? Especially if their iBuying is not going on as precipitously as it needs to be. SoFi, for example, I think is going to have a great Q2, but is it going to have a Q2 that's going to impress the market to such an extent that it's going to rally even more than it has so far? Again, SoFi is a small cap, so it has a lot of room to run. I think it has 132 million shares that are short out of a basically 959 million outstanding share float. And so if the shorts cover, then it's not necessarily a squeeze, but you do have some more buy side momentum on the stock. But the question is, how good are the earnings for these shorts to cover? That's going to be something we have to think about. And then you got companies like Meta that look, Meta's earnings. So let's talk about big tech earnings. I think Nvidia is going to crush earnings. I mean, they said they're going to crush earnings. They're going to crush earnings. The demand for Nvidia chips are just out of this world. The H100s, they're going to do fine. I think Tesla, Tesla's an interesting one, but I think Tesla's going to do fine given we saw the vehicle deliveries. I think Amazon's going to be a monster because they're going to show free cash flow out the wazoo and they're going to show CapEx reduction. And I think Microsoft's going to be fine because I think Microsoft's just Microsoft and they always have a good earnings, even if they don't have some massive 10% update. Meta is going to be an interesting one because as much as I think they're going to do well, I think they're going to get some questions about what's going on with the metaverse because it doesn't seem like this whole metaverse fantasy that Zucks has branded the company into is actually happening. So that's going to be a question that they have to answer. And then it's going to be a question of Threads. How much money are you spending on Threads? And I think the answer is relatively nothing. So that, it's not a big expense. But I think monetization of Threads is going to be a key question. Now, can Meta go higher? Absolutely. Meta can go higher, but it's already up almost, 100, it's up 150 something % for the year. And it's up from the lows at 88. So the valuations have not necessarily gotten frothy, but they've gotten strong enough to the point where if you buy Meta, you're paying $750 billion per share. And that's something to think about versus when you were buying it at $300 billion a share or $200 billion a share. Same thing with Netflix. How much is the getting rid of the password sharing increase subscriber growth? Now, the articles I saw is that it's massively increasing subscriber growth. So that would be great for Netflix. But how much does that actually translate? And then you got Google, which is like, again, so I was doing some research for Google over the weekend. 83, it was like 95% of their revenue was search, and 84% of that 95% was search. So what I mean by that is 95% was advertising, 85% of that advertising was search advertising. The other 10% was like display advertising, video advertising, all that stuff. So I think the market's a little weary that if search has declined or showing any potential of decline, which I don't think it is, but if the market thinks it is, that's where you've got a Google that's not doing the best before earnings. And if they hit it out of the park and they're like, nope, search is great, no problem, then the market either brings it back up and says, all right, 125, there we go. Or the market's like, look, you all you have is this one cash cow, and we think there is no moat and it's eventually going away. So you need to do something to innovate outside of that, which is a very tricky spot to be in if you're Google. So I think big tech is going to have a very interesting earnings. Overall, I think it'll be fine. But I mean, if it's not the best, then Tom Lee's prediction of the S&P rallying on this is probably going to be wrong. We're going to see how that plays out. S&P at 439, up for the day. Not too bad. Samuel, good morning. Thank you for being here. Is Carlos covering Tesla's earnings? Usually Farzad covers it, and I just tuned into Farzad's stream. But if you guys want, maybe Finance Junkies, we can cover it. We're definitely not going to be as big as the OG Tesla guys covering it. But if we want, just 100 people to chill with the Finance Junkies covering Tesla, we can definitely try doing that. Yes. Okay. You guys are talking about Threads. All right. So you guys want to talk a little bit about Threads. So, couple thoughts on Threads right now. Let me actually pull up the counter. It has, I would say, 100 million users. What is the website? The website is, here's the website. So we go to this website. We'll show you guys in real time what the Threads users are. Okay, there's 101 million Threads users because this website basically scrapes the Instagram data because if you join Threads, it is public on your Instagram, so they have to give it a number. And so as of 36 minutes ago, we have 101 million Threads users. What are your guys' thoughts on it before I give a little 2-minute rant? Because I have a lot of different ideas on what's going on with Threads. I have bullish and bearish arguments. Amit wearing a suit. I can't believe he sold out. You know what they say when the money gets too big? Had some nice hedge funds say, hey, Amit, if you can just wear a suit on the stream, we'll put a little money in your pocket. I was like, all right, man, I'll do what I got to do. Could you imagine, bro, if a hedge fund sponsored my stream? That'd be ridiculous. I feel like that wouldn't even be possible. Like, they're like, hey, Amit, we like your personality. Here's like $30,000. Just mention us Blackstone Capital at the end of the stream. They're like, oh, that's very interesting. I have a friend who works for a hedge fund, and he's allowed to take 70% of his income and invest it into the hedge fund, and the hedge fund actually puts out 70% year-over-year returns. And I'm not lying; they guarantee 70% year-over-year return. They don't guarantee, but like that's how the fund does. So literally, I think he makes like $350K. He takes whatever 100-something K, and he just dumps it back and gets 70% of that. Like it's actually insane. These hedge funds are just crazy. Okay, so Threads. Look, simple thoughts on this. Let's talk about the business case for it. Meta can monetize this very easily. They are creating a massive amount of text, a corpus of text that is going to train their LLMs. Meta has photos and videos. They don't have text. They're basically getting the entire world to say a bunch of shit, have a bunch of conversations. They're going to train their LLMs to be even smarter, basically taking the Reddit approach without having to steal from Reddit. Okay, that's the first thing. Second thing, the newsfeed is the most monetizable surface in the history of Meta. I mean, like that newsfeed just prints money because Meta figured out how to do ads, and all they do is put it in your face. You scroll through it. Most likely you're going to click because it's relevant to you. And then boom, you've got your advertising. And by the way, they can take all the Instagram data. They don't need to collect new data. You're the same user on Instagram or Threads. So they just collect the same data from Instagram and they show it on Threads. That's the second thing. The third thing is this is another way for Zucks to gain access to the metaverse. Carlos was talking about this last night. If this is a proxy for them to be able to create a new world from a text-based medium and get you into a VR medium, then boom, you have 100 million people and growing. I mean, there's 100 million in like 4 days. It's insane. That gives you into the metaverse. So those are all the bull cases. Very monetizable, trains their LLMs, proxy to the metaverse. Now, the bear case is where you got to get a little nuance here. The bear case, and let me pull up Meta stock, is that you connect via your Instagram. And when you connect via your Instagram, you're connected to your friends. And quite frankly, the reason I like being on Twitter, my Twitter's in the description, is because I get to be a new person. I get to be Amit, this like investing personality guy that's kind of like goofy and he likes Palantir and SoFi and he talks about all this stuff. And that personality is very fun to build and it releases the pressure from having to know my friends from high school are looking at everything I'm saying. And so I think the combination with Instagram, I really think this is a problem for Meta because there's simply two issues. Number one, I don't want to tweet to those people. I don't want to talk to those people on the stream or not on the stream, on an app. And I don't want them to see my thoughts. Number two, I don't think they care about seeing my thoughts because they care about, me as a friend. They don't care about me as this like guy who's trying to understand stocks. And as a result of that, I think the content they would be getting in their feed from your friends when it's not photos and videos, but it's text-based, meaning you actually have to think. You can't just say some random bullshit like, oh, I just went to the gym. It's like, no one cares about that. You need to like really like have some type of a message in a text-based medium that makes sense. Is not going to be attractive to these social clusters that Meta is trying to build their entire graph based on. And I don't think 1 billion people care enough about 1 billion other people's individual thoughts. On Facebook, it's mainly photos and videos and like family updates and all that stuff. I don't think that's the same on Threads. And so if also the head of Instagram, Adam Mosseri, said, hey, we don't want politics, we don't want news, we don't want any of this stuff. I mean, literally, this. Let me actually show you the screenshot. This is what he said. And so when you've got the head of IG basically saying, we don't want the stuff that Twitter is known for, because they said that creates a cesspool of negativity, then you're not going to allow that stuff to be uncensored. I mean, literally, they started censoring a bunch of people that were talking about the election, and they were saying all this different stuff. And so they made a conscious decision to have a heavy amount of censorship. This is what the head of Instagram said. Politics and hard news are important. I don't want to imply otherwise, but my take is from a platform perspective, any incremental engagement or revenue they may drive is not at all worthy the scrutiny, negativity, or integrity risks that come along with them. There are more than enough amazing communities like sports, music, fashion, beauty, and entertainment. Notice he didn't say business. He didn't say stocks, to make a vibrant platform without needing to get into politics or hard news. He also said politics and hard news are inevitably going to show up on Threads. They have on Instagram as well to some extent, but we're not going to do anything to encourage those verticals. That means we're going to censor the fuck out of that shit because we don't want that content on our platform. Look, at the end of the day, I'm not even making a ideological case about free speech or anything like that. Like, forget any of that. I'm literally just saying if they don't want that content, my question is, are we just going to be talking about Kim Kardashian all day? Like entertainment, like beauty, music. Are you kidding me? Like, are we really going to have engaging discussions about keeping up with the Kardashians? Like, because yes, that's brand safety and that's good for the advertisers, but is that actually going to keep people engaged? The reason people engage on Twitter is because there's controversy. And so I think I understand the plan. I don't know if they can execute the actual product to be what they think it can be. And that's why I'm not the most bullish on Threads. Depersonalizing your profile with Twitter is partly what enables free speech. Overly provocative remarks are not suited for Threads, but I think Zuck has a different understanding of social platforms. I agree. And look, if your employer sees your overly provocative thoughts, that's also going to discourage you from, and the overly provocative statements, or at least some statements that are a little bit controversial, are what drive the engagement in the first place. That is the beauty of Twitter. Now, the problem is that's also the downfall of Twitter because you can't scale to 1 billion users with a model like that. And so that's why I think Elon's been trying to get people to subscribe versus do the advertising because it's just so hard to do that. But that's the issue I have with Threads. I think it is short-term bullish. Long-term, I don't know if the platform fully plays out for everybody. Okay, let's take a look at another clip, and let's see a little bit of what we have going on. This one's an interesting one. Jim says maybe we get a little bit of stagflation, which is interesting. I haven't heard this take before. So let's take a look at this, and then we'll get back to the charts.
Getting a whiff of stagflation following Friday's jobs report, which showed stronger than expected wage growth and weaker than expected employment growth. That's at least what Jim Grant says. He is the founder and editor of Grant's Interest Rate Observer. He joins us on set right now. And Jim, a lot of people looked at that number and thought, oh, good, it's not too hot, not too cold. But I think you make some valid points when you say, look, the jobs numbers were lower and the average hourly wages component was up.
Yes, and a little bit of just the spritz of the late 1970s. It wasn't terrible, but it underscores the difficulty of the degree of difficulty of the Fed's job now. It reminds me a little bit of Captain Sully on the Hudson. It requires a great deal of precision and not a little luck to do what they say they will do, which is to deliver us from the consequences.
Okay, I got to stop this guy because it's really just hard to listen to him. I'm sorry for that, but either way, it's good that I'm stopping him right now because the market just tanked. The market absolutely just tanked. Here we go. We got Robinhood at 1059. We got Palantir at 1505. There's that massive red candle right there. There you go. Look at that. That's that sequence of red candles. You've got Snowflake down 4% on the day. Tesla also just went to 268. 269. So a little bit of a green candle, but there was the red candle right there trying to recover from that. Yeah, that was the market just tanked. Look at all that red. Look at that. Nvidia, it was at 427 when we opened up the market. It's at 419. Goodness gracious. Enphase at 164. Apple at 187. Yeah, it's not going back to 3 trillion today. And Novix down 2%. Nikola down 3%. Roblox down 2%. Unity back under. It was at 44 last week. Now it's at 38. It opened at 40. So whatever we just saw, we saw a bunch of algorithms just dump. Look at that. SQQQ is up 1%. It was down 1% to open the market. We saw a complete flip of the market just now. A complete flip. Where's the S&P? S&P's at 439. That's so some of the big tech is still holding up S&P. Google also now at 117. Open Door down 2%. SoFi for some reason holding up not too badly. The Nasdaq at 13,608. Nasdaq down about 53 points as well. All right, we got a little bit of a red market. Got a little bit of a red market. This phrase "whiff of stagflation" will be used across all media outlets. Yeah, to be honest, I wanted to click on it to see if he had any good arguments, but then when he started talking, it was kind of hard to listen to him. I don't know if we're getting stagflation, bro. That's a little. I mean, the days of stagflation, I think, were a couple months ago to analyze that. Now, I don't think we're in there. Amit, what price did you get into Robinhood? I got into Robinhood at 905. There was a day like 2 Fridays ago where it just tanked like 8%. But remember, I don't have the stock. I have the options. So my options right now, I got the options like 54 cents a share. And right now they were at 72 cents. In the morning, they were at 80 cents. Right now they're at 75 cents. So the options are doing pretty well, just given I got them low. And so if they can, as long as Robinhood doesn't get down below that. But look, I think right now it's still fine for Robinhood. The thesis on Robinhood is very simple. The cash on hand matches their market cap, or approximately close to the market cap. Markets, if we have a bull run, it's going to be a great investment. If we don't have a bull run, it's not going to be a good investment, because the bull run is going to create a massive amount of users. They're going to start trading. The volatility index is good for Robinhood. And what was I going to say? And they're 3 cents away from GAAP profitability. So I think the thesis for Robinhood makes a lot of sense here. Look at that. Microsoft is down. Look at that, 329. Palantir below 15. There you go. There it is. Snowflake 162. We got a massive red turn. I mean, most of the main stocks that matter just went down. Amazon even. Wow. So here's the thing. If we get another red day tomorrow, those may be 2 days of a dip that is going to be amazing to buy if the S&P does what Tom Lee says it's going to be, or if what I mean by S&P is from CPI. If CPI is amazing on Wednesday, or if CPI is not amazing, then the red's going to continue, and we're going to have our first major red week of the summer, because we haven't had a really major red week. I mean, the S&P is at 438 from 443. It's like I'm talking about the S&P at like 420. That would be, could that happen this week? I have no idea. But like, if the CPI data doesn't go the way the market wants, and we're expecting the rate hikes, and we're already getting red in anticipation for the CPI data, yeah, it could be a red week. It could definitely be, which is not the worst thing in the world, because honestly, it would be nice to get a little bit more of prices. Just got my Apple puts at 9:30. Nice. All right. Not bad. You need a bow tie to match that guy. I'm going to start wearing a tie every day. I'm going to start wearing a tie. We can buy Jay for Jacobs, who's a partner of Palantir. I would not buy Jacobs. Jacobs is a like engineering consulting firm. As cool as they are, they're a $15 billion company. I don't know if there's any unique upside to Jacobs. I haven't done no due diligence on them, but yeah, I would. I don't know if I would be the most bullish on Jacobs per se. Their chart looks great for the 5 years. I mean, in 5 years, they're up close to 150%. But again, I just have no idea what Jacobs does. So I wouldn't buy them literally just because they work with Palantir. Amit, Enphase will be one of the biggest runners from Wednesday through the first week of August. I don't know if you're right about that, Johnny. I'm not sure if you're right about that. Enphase still has the issue about interest rates. Like, remember, if interest rates go up, it is still going to be harder to finance solar. Now, I know that's baked into the stock, but even their CEO said don't expect earnings to be good for Q2 because of interest rates. He said wait till Q3, Q4. And that's if we get a cut. So I don't know if we get the biggest run. Could it run from here? Sure, because it's down pretty significantly. But I don't know if it has like the catalyst to give it the biggest runner into August. I don't know what that catalyst is necessarily, other than you're saying on the technicals it's undervalued, which maybe you're right about that. But I don't know what the other larger catalyst is. Amit, I saw Alex Karp on a Netflix show last night called Hack My House. Interesting. I'll have to watch that. Melly pulling back. Oh my goodness. So Melly, I've been looking at this stock a little more ever since Carlos mentioned it. So this is the Amazon of of Latin America. Some of you guys may know it, some of you guys may not, but one stat that I really attracted me is they're growing their net income 300% year over year. Profits are growing 300% year over year. This is an interesting one. Let me go to the 5-year on this. Why does this chart suck right here? Let me do 6 months. Okay, 6 months, a little bit better. Let's go to the 5-year. Okay, there we go. So it was at $257 in 2018. It's basically 5x, right? 4.3x. At the height, it was 2000, so almost 10x. But right now it's up 5x. That's not bad, man. 500% in 5 years is pretty phenomenal. It was at 148 in 2016. So in 8 years or 7 years, it's up almost 10x. So look, this is an interesting company, and it's only a $50 billion company. That's the interesting. It's only a $50 billion company, and the total addressable market is Latin America, and they're the Amazon of Latin America. Again, that is my elementary due diligence of this. I have not done a deep dive on this, but it looks interesting. Actually, let's go to this website real quick. Let's do a really quick over the year analysis of Melly, and let's see what they've got. I've been thinking, I'm like, yeah, even if I get a share a month, and eventually they're going to do a split, but it's not that bad. It's not that bad at all. Enphase earnings are baked in exactly Q3, Q4. When low, buy. It'll be too late. Maybe. He did not say that. He definitely did say that, Johnny. On the call, he was like, look, Q2 is not going to be the best because, or he's like, don't expect Q2 to be amazing because he's like, he basically said when interest rates have to go down. That's what he said. And interest rates have not gone down. They've gone up and they're going to keep going up. So I don't know. Maybe you're seeing something I'm seeing in a different way. Okay, let's go to some of Melly's fundamentals real quick, and then we'll be out. So, growth rate, revenue, 11.3 billion in revenue, not bad. Operating income, 1.2 billion. That's just amazing. 11.3 billion in revenue, 1.2 billion in operating income, 618 million in net income. And again, this one's growing 300% year over year. By 2025, analysts are estimating to be 1.8 billion of net income. That means profits. 12 billion in liabilities, 14 billion in assets. Growth rates, negative 407 million on capital expenditures, 3.6 billion in free cash flow. Let me click on profitability. It's looking interesting. That's for sure. It's looking very interesting. 11% operating margin, 50% gross margins. Now, 5% net margins make sense because it's retail at the end of the day. It's the same thing as Amazon. So, the reason Amazon really got its valuation is because they introduced AWS and that had SaaS margins. I don't know if Melly has any type of product that is better than kind of like, just selling retail stuff. But it's something to look into what it's looking like. The numbers look legit. The numbers, I have to dive deeper, but just as a very baseline overview, profitable, growing profitably at the rate of 300%, free cash flow up the wazoo, and market cap seems reasonable given the overall qualitative TAM that they have going on for them. So not crazy. MercadoLibre is not as well managed as Amazon. My God. Yeah, I agree. I mean, it's obviously not an Amazon. I don't even think it's a tech company from that per se. It's more like a retailer that has a lot of tech, but Latin America is a big market. So that's all. Okay, that is it for me. So we'll keep diving deeper into Melly. I'll get the guys to talk about Melly on Finance Junkies as well. We'll get Chris's opinion, everyone's opinion, and we'll keep going. What's stopping Amazon from going to Latin America? I think there's a lot of things that's stopping a big multinational conglomerate to just stepping into Latin America. I mean, it's not the easiest thing for them to do, especially like there's a lot of cultural things I think that go into this. It's why Melly's even, profitable in the first place. So we'll talk about it on Finance Junkies. We'll go deeper into that. All right, that's it for me. A couple more videos coming out a little bit later today on Palantir. We're going to discuss the new healthcare video. There's a Ukrainian new documentary thing. It's like 8 minutes that talks about Palantir in depth. And it's like some objective third party analyzing Palantir in Ukraine. We're going to talk about that. We'll have a clip of me and Sachin's podcast that'll be out a little bit later today. And then we'll have the daily live stream at 9 p.m. for Palantir. And then after that, Finance Junkies back at 10 p.m. So we'll keep going from there. SoFi ripping back up. Where's SoFi? Where is SoFi? Yeah, market's recovering just a little bit. 826. All right, not bad. A little bit of recovery on the market. Where's Palantir as we ended out? Palantir's still down. Oh, no, Palantir, look at that. 1518. Came right back up. This is incredible, man. Every time I think, all right, we're at 14s, we're going to start getting lower, we're getting the leg down, just bounces right back up. 15, someone bought the dip. Not bad. Not bad at all. All right. That's it for me. Thank you, everybody. I will see you guys later today, 9 p.m. and then 10 p.m. Follow on Twitter. Twitter's in the description. You can check it out there. I'll see you guys later. Johnny, thank you for the links in the chat. Bye, everybody. See you later.